All right, WeTradeHQ fam, we got DonFron back here from the DonFron show. So if you haven't caught it yet, DonFron is going to talk to us about the stock we're looking at. So I want to talk about MGM today. And then you go through your zones, kind of give us a little bit of an idea of what the zones are for somebody who hasn't seen it before. And then let us know if you would take in a position where you're looking for MGM.
Okay, perfect. I can do that. So I'll go ahead and share my screen. What's up, everybody? That's not a YouTube video if I don't start out with that. Let's grab that. Boom. So pulled this up. Now, it's been a while since I've actually broken this one down, but you can see we were playing these zones from back here. And even looking forward, we can see, right, we got some hype here. So earnings is all right. We had a crazy push up, all eyes on this. You can see there were sellers here. Now, when I draw these zones out, I'm looking for buyers, I'm looking for sellers. These zones are that balance, right? When there's more buyers, it goes up, more sellers, it goes down, supply and demand. Whether you're an investor going off of hope for the next 5 years or a day trader going off the VWAP for the next 5 seconds, you are still buying or selling for whatever reason you have. So I like to get in kind of under the radar and just buy when there's buyers, sell when there's sellers. That's the very basic of these zones. So bull case, got a little carried away. There was definitely still some sellers up here. It sold off, but we're holding this middle zone right here. If we actually take extended off, right? So that the after hours stuff is the only candles down here may be confusing you and kind of think anything else. I don't care about a gap fill yet. But let's go over it. If I were to take this trade, bull case, it's looking good. All the sellers in the world showed up right here, just like we thought they would. Buyers holding it right here. Bearish case, we're starting to make some lower highs right here. And typically what I call it, hammer on glass. You know, here's your plane of glass. Here's the hammer. In my experience, more often than not, it is the horizontal line that breaks. We're kind of just charging up right here. And we're about to that point where something's going to happen. One of these is going to break. So again, bear case, that's about to happen. Come down here. Your dip buy, probably going to be that zone down below. One thing I do watch out for, I don't take trend plays. I don't actually do that when it comes to the stock market. I keep it there just for more a quick visual of lower highs. But what I will say is once we start to cross this trend line inside that zone, that might be where it's time to switch gears. So personally, if I'm going to take this trade, I would take a long position. Well, we'll get in right here. No reason to still be in it, right? This sold off even after hours. It got bought right back up. No reason to still be in it once that breaks. So right below that wick, right, we know it's sold off. It's got bought right back up. Those buyers are there. The second they're not, you don't want to be in that crowd. Put my take profit right here. And that's how I would structure that trade. I would go long on this regardless of this right here. And pretty awesome risk to reward. The buyers were here. We know someone thought it was worth that much. The seller showed up. So we're cooling off. Stocks like when they get crazy, they're going to go sideways, so they're going to pull back. They need to cool off somehow. And it looks like that's exactly what we just did. So that's how I would structure that trade right there.
So even though you're saying you have this hammer on glass play because it's to the bottom of the zone, is it because it's settling out or just because it's the bottom of the zone that you're willing to go long on it?
It's just a zone play, right? So for some, buyers are right here. And after this previous trend up, there's been more buyers. Like looking at the history behind it, there's been some buyers recently. So whatever catalyst this is might still be here. I think we might just got a little carried away right here. Got a little emotional, overreaction, cool back off. And then this trend will probably look bad, but you know, I doubt we go completely sideways all the way out to here. But you see how we were already starting to buy in anyway. We just got a little, we started to curve our way up. So I think we're just coming back down to reality to more of a normal buy. And this zone right here is a pretty polarizing zone, kind of bullish above, bearish below scenario. And since we're testing it from the top, I got to say that's where the buyers should be stepping in. So, and if I was going to go short this, it'd be easy. I mean, hammer on glass, you would just switch this to a short position. So your entry's here. Now, if it went anywhere, I'd have to put my stop above here because if it pushed up anywhere else, it could be still a lower high or even a horizontal play. So your risk to reward pretty close. They were both about 10%. This one's got a 3% move to the upside, where if you just went long, I think it was like a 10% move to the upside, maybe a 2% to the downside. You know, manage your risk by your position size, not by what the stock's going to do. So either way, you'd still risk the same $100, whatever you're going to do on that.
Awesome. So, and then real quick, just talk about your strategy as far as zones and charting zones.
Again, so I like to talk about where the buyers and sellers meet. So the reason this went sideways right here is because there's buyers and sellers are canceling each other out. For the very simple fact, if we went simple numbers, if there's 100 sellers and 100 buyers, that price does nothing. It goes sideways. The second a few of the sellers go away, there's only 95 and there's 100 buyers, you start to see it creep up. It's that auction effect, right? Mm-hmm. You know, do I get a buyer here? Do I get a buyer here? No, no, no. And that's when you get those gaps. By the way, if we were to take this off, there wasn't a single seller to even create that transaction. Someone had to sell a share right here where that candle opened, because it's a red candle. So we actually closed here, gapped up to here. It means no one was willing to sell at all. Whoever bought here said, I'm not selling here. I'm not selling here. Imagine an auctioneer. Well, you sell at this price, this price, this price. Nope, nope, nope. Someone finally said yes here. That's what caused that to even open up here. Pushed up. Now everyone started to pile in. That's where the sellers showed up. They came and they weren't so shy anymore. Came back down. So understanding just supply and demand and how that actually works, you start to find these little clusters of balance where the buyers and sellers meet. And that's what creates that yellow zone. That's the structure, right? I want to get in here, the buyers and sellers definitely at the table. Now, if I'm wrong, that's where I stop out just outside of it. But when you get to that zone, you have the structure. Now we start looking for multipliers or reasons to be long or short. Like, okay, we got it here. Cool, we're in the yellow zone. Why do I want to be long? Why do I want to be short? And if there's more reasons to be long than short, I'd probably take the long play. There's always going to be two sides of the coin. There will always be bullish and bearish reasons. What's more realistic? What is your emotions feeding your play? And, you know, you have the structure. Why? Now we're looking for the why.
Awesome. Don from the DonFron Show. So, guys, check his channel out. I'll put the link in the description for his channel. Recently had his Tesla Tuesday. So he has a video on Tesla Tuesday, which I'll also link at the end of this video. And then goes live every Wednesday and Sunday. Thanks, Don.
Thank you.
How about